Thank you. Good day, everyone, and a warm welcome to Ester Industries Q1 FY21 Analyst and Investor Conference Call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this call with opening remarks from the management, following which we will have the floor open for interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect was sent to you in the invite earlier. We trust you have had a chance to go through the documents on financial performance. I would now like to invite Mr. Singhania to make his opening remarks. Over to you, Arvind.
Thank you, Kevin. Good afternoon, everyone, and thank you for joining us on our earnings call today. I have alongside me Pradeep Rustagi, our CFO. Before I begin, I hope all of you and your loved ones are safe and healthy. I will start the call by highlighting the key operational highlights, post which Pradeep will walk you through our financial performance for the quarter. To begin with, our revenues during the quarter were largely impacted by the lockdown-led manufacturing and supply disruption, which we had indicated to you about in our previous call. I had also said that the business has picked up pace again and we should be performing well for the rest of the year. Film business has seen good traction again on the back of strong demand. Performance of specialty polymer business, consequent to the pandemic and the increasing restrictions in customer markets, was muted, though we are confident about long-term prospects of the business as fundamentals remain strong. Performance of the engineering plastics business was suboptimal, owing to suspension of operations due to softness in the application industry segment. However, return to normalcy has been faster than expected, as we have been able to achieve normal levels of operation in the month of July 2020. Whether this will be sustained going forward remains to be seen. Though overall situation in the near term continues to remain challenging for the EP business, we are nonetheless undertaking steps towards reviving this business by improving the product mix and rationalizing expenses. Let me now talk about the individual businesses, starting with specialty polymer. FY20 was an exceptional year for the business with strong revenue and profitability growth. Though our Q1 performance, as indicated in our previous call, was to a large degree impacted by the closure and lockdown challenges in India and USA, we expect return to normalcy towards the end of the current financial year, maybe a little bit sooner. Had this pandemic not happened, we would have definitely seen a very strong growth in FY21 itself. Demand for the innovative PBT continues to remain steady and growing. Further, new product for the carpet industry which we have developed has been found to be very successful. We have already started receiving orders for commercial volumes in the last couple of weeks. This product has immense potential going forward. MV16, which is our newer version of the cationic diethyl master batch, has also been qualified by some of our customers, and we expect to start receiving the first commercial orders within the next 2-3 weeks. Apart from this, we have a healthy product pipeline in various stages of development/customer approval, which makes us extremely confident about the prospects of specialty polymer business going forward. Moving on to the film business. The revenues for the quarter were lower, largely owing to lockdown-related challenges. As a result, we lost about 1,600 metric tons, amounting to about rupees 20 crores of sales in the month of April 20. However, since May 20, we are running our plant at full capacity. While domestic demand has been growing at a healthy pace of 11 to 13% per annum, we are also witnessing a further upsurge in demand due to COVID-19. It appears that there is a shift towards packaged products for health, hygiene, and safety reasons. Margins during the quarter improved over corresponding quarter and previous quarter, resulting into sustained profitability despite lower volume of sale. We expect the business momentum to continue on the back of strong domestic and international demand. Further, we are also working towards increasing the share of value-added products in the overall mix. We have commissioned the offline coater, which is a significant step in this regard. We are planning to increase the share of value-added products to 30% over the next couple of years, which would help increase the profitability levels in this business. As regards expansion of film capacity through a wholly owned subsidiary, I am very happy to inform you that we have already started implementation of the project. We are confident that basis projected performance, the expansion will not exert any pressure on our balance sheet. Our debt levels are at a very comfortable level at present. Pradeep will talk about this in a bit. All I will say is that we are conscious of the need to maintain growth momentum, and we will achieve this with better than prudent levels of debt to ensure a healthy balance sheet always. Moving on to engineering plastics business. Performance of the engineering plastics business was suboptimal, owing to suspension of operations due to softness in the application industry segments. However, return to normalcy has been faster than expected, as we have been able to achieve normal levels of operation in the month of July 2020. Like I said before, whether this will be sustained going forward remains to be seen. Overall situation in the near term continues to remain challenging for the business. We are nonetheless taking steps towards reviving the business by improving the product mix and cutting down on expenses. A quick word before I hand over the floor to Pradeep. We have been diligently working to improve efficiencies and enhance productivity. Conscious of the need to maintain a healthy balance sheet, we have adopted a judicious and prudent approach as regards to utilization of funds for prepayment of interest-bearing term liabilities and conserving resources for expansion project. To conclude, I would just like to say that after delivering a strong performance in FY20, we believe FY21 will be even better in terms of profitability. Film business is expected to drive bulk of this growth. Performance of specialty polymer business is expected to remain muted for some time due to impact of COVID on customer markers. However, we expect return to normalcy by the end of the current financial year. New developed products are seeing good traction, and the product pipeline continues to remain strong. Lastly, while engineering plastics business has had a few challenging years, they are hopeful of things improving over the coming quarters. With that, I hand over the floor to Pradeep to walk you through our financial performance. Thank you.
Thanks. Good day, everyone, and thank you for joining us on our earnings call. I hope all of you and your loved ones are safe and healthy. Let me quickly highlight the key financial developments, post which we can commence the Q&A session. Starting with the top line, revenues for the quarter stood at rupees 189 crores as against rupees 284 crores reported during Q1 FY20, lower by 34%, largely owing to the lockdown implemented during the beginning of the quarter. EBITDA for the quarter stood at rupees 52 crores as against rupees 54 crores generated during Q1 FY20, largely flat despite lower volumetric sales and revenue generation. A combination of the improved margins in film, improved efficiencies and cost management resulted in maintaining operational profitability. PAT for the quarter stood at rupees 29 crores as against rupees 24 crores reported during Q1 FY20, higher by 23%. Moving on to the segment-wise performance, starting with the film business. Revenues for the quarter stood at rupees 161 crores as against rupees 226 crores reported during Q1 FY20, lower by 29%. Despite lower revenue generation, we were able to report better margins and profitability owing to improved margins on account of favorable demand-supply scenario. EBIT for the quarter stood at rupees 55 crores as against rupees 50 crores, higher by 10%. EBIT margins in terms of percentage as per segmental reporting improved from 22% to 34%. Moving on to specialty polymer business, sales for the quarter stood at rupees 10 crores as against rupees 16 crores reported during Q1 FY20. Performance for the quarter was largely impacted by the lockdown and closure issues in India and USA. But as mentioned by Mr. Singhania, given that the business fundamentals remain steady, we expect the same to revive steadily by end of the current financial year. Lastly, moving on to engineering plastic business, temporary suspension of operation resulted in lower profitability for the quarter. While the overall business environment continues to remain challenging, our efforts towards improving the product mix and lowering the cost should help in maintaining the margins in the business. A quick word on the balance sheet before we commence the Q&A session. In comparison to interest-bearing debt of rupees 142 crores as on 31st March 20, interest-bearing debt stood at rupees 99 crores as on 30th June 20, compared to rupees 73 crores and working capital liabilities of rupees 26 crores. Interest-bearing debt as a multiple of EBITDA stood at 0.47x as at 30th June 20. We expect further reduction in the coming quarters. We are confident of maintaining total outstanding liabilities and tangible net worth ratio at prudent levels going forward. We are diligently working towards continuously deleveraging our balance sheet and improving our leverage ratios. To conclude, I would like to say that we are confident of delivering a good performance during FY20, aided by strong momentum in film business. 21. Thank you.
Should we open up for questions?
Yes.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Sonal Kori from Bowhead. Please go ahead.
Thank you for this opportunity and congratulations on a good set of numbers. So I have a couple of questions. My first question is that, when you look at sales minus raw material per ton, what was that number for you in this quarter? And if you can give some indication, what kind of, number would that be in the month of July,
Okay. The gross value add in polyester film for the June quarter was 60 rupees.
June quarter was
55.
June 20, 12 micron 55.
12 micron plain commodity was 55 rupees, the gross value add. In July, it is much higher. It is more like July was about 77 rupees.
I'm sorry, what did you say the number for July?
So June was 55 rupees.
Yeah.
And July, which has gone past, has been about 77 rupees.
Rupees per kg.
Rupees per kg.
For polyester film.
For polyester film, 12 micron commodity.
So, sir, what is driving such a large change, and would this change lead to increase in EBITDA, or there's some other cost? So, if I see the difference is 77 minus 55, what pushed off it will flow through EBITDA, or there are a lot of costs below the.
No, there is no increase in cost. There is no increase in cost.
Okay. And sir, what is driving this change? So, did you start seeing this kind of numbers even in the months of May or June, or it's largely a July phenomena? What I'm trying to understand is that was it that April was bad because of lockdown, or May, and the situation improved even in the last quarter, or this is a recent phenomenon? What is leading to this kind of change?
We had touched these kind of numbers even in March.
March was 52 rupees, 12 micron corona.
Yeah. But
so I'm talking about the 77 kind of number. I'm talking about the 77 number.
We had touched a number of 70, 72 rupees also in the month of March, in early March, before the lockdown happened. So we are seeing, like I mentioned before, we are seeing a very steady growth in demand in the domestic market as well as the international market.
And is this demand here to stay, or what could go wrong? What is driving this demand change?
So, like I've been saying, that the demand growth in India has been in the range of about 12-13% for the last many years, and we expect this demand growth to continue for the next few years. People are changing their habits, the consumption habits of people are changing. They're going more and more towards packaged food rather than open kirana shop material. It's a change of habit that is happening. We are a country with 1.4 billion people, with close to 400 or 500 million people in the middle income bracket, and that bracket is also growing substantially every year. So, and on top of that, we are also seeing there is some movement towards packaged goods because of health and hygiene post-COVID. So that itself has had an impact, and which is here to stay. We don't believe that this is a short-term spurt as far as demand is concerned. Demand growth is concerned. It's going to be a sustained growth story.
And sir, what was the tonnage you did in the June quarter, and what is the maximum you can do in a quarter, and what was your EBITDA per ton in the June quarter?
Sorry, say again, please. Your voice is not very clear, Sonal.
My apologies. Is it better for you now?
Yeah, now it's better.
So, sir, in the June quarter, what was the EBITDA per ton and the total tonnage you sold, and what is the maximum you can sell in a quarter with current capacities?
So, the maximum that we can do is approximately 5,000 tons per month right now, and we are running at full capacity.
So June quarter was full capacity or?
No, June quarter we lost 1,600 tons because of the lockdown in early April. So these numbers for June quarter numbers would have been much better had the lockdown loss not happened.
So what was that volume number for June quarter?
So what number?
What was the total volume sold in June quarter?
June polyester film was 12,631 tons.
And you're saying you can do 15,000?
Yeah.
In a normal.
15,000 plus minus couple of hundred tons.
And sir, what would be your EBITDA per ton in the June quarter?
So the variable expenses and the fixed
EBITDA and EBIT margin है ना 55%.
And this we are taking into a common expenses also. So we have per kg expense over raw material in the range of 25 to 27 rupees till EBITDA. So if 55 rupees was my value addition for 12 micron, you reduce another 25 rupees, that will give you the EBITDA about, let's say, 28 rupees.
So lastly, if you can tell us about your, polyester business. I mean, this year will be a washout, as you said, but what kind of, let's say, a more longer term plan, let's say 2023, what kind of, I know it's difficult to forecast because it's a little way off, but what kind of ambition you have or what kind of turnover you could achieve perhaps in, let's say, 3 years from now, let's say 2023 or 24, and what makes you, confident or underconfident about, this growth in specialty polymer, polyester, sorry.
You were asking both for film and specialty polymers, right?
No, polymer business.
So specialty polymers, okay. So specialty polymers, the fundamentals remain very, very strong. We, like I said before, we delivered a very good performance in FY20, and that would have improved substantially in FY21 had COVID not happened. But like I said, fundamentals for this business remain very strong. Basically, we have lost ground on our MB03, the stain-resistant master batch product, which we did 1,100 tons last year. We were expecting to do anything close to 1,700 tons in FY21. But this volume will be lower because the main market in America has got very badly impacted, and therefore we are going to lose volume on this account only. The specialty PVT business is steady and growing despite COVID. So we did 450 tons last year, and this year we'll do about 800 tons plus. So that business remains strong. Other than that, right, in the previous portfolio, we had a variety of small products which we have to wait and see how they will be impacted. So largely, we may be close to last year's performance in terms of volume and turnover in specialty polymer business. But next year onward, we expect a very, very significant growth owing to not only resumption of volumes in MB03, further growth in volumes of the specialty PBT, and 2 new products which we have started. In fact, the new product we developed for the carpet market, we just started receiving orders in the last 2 weeks. So that product has been qualified, and now slowly that volume is starting to. Last 2 weeks, it's a new development. And also on the MB16, which is our cationic diable master batch, which was earlier known as MB06. MB16 has been finally qualified, and we expect to receive the first commercial order in the next week or 2. So there is a lot of potential in terms of these 2 new products plus the existing products. And on top of that, we have a pipeline of another 2 or 3 products with phenomenal potential, which are at various stages of development with the customers or customer qualification. So that is why we are extremely bullish about this business going forward.
And sir, is there any ambition level, like what is the realistic level of growth as investors, we should expect a broad range would do, over the longer term?
I mean, if you ask me over the next 3 years, where would we be? We could very easily be in the region of 300 to 400 crores with EBIT margins of 35-40%.
And what would be that number for 2020 or 21?
2021 will be maybe the same as FY20 because of COVID. Or maybe even a little bit lower. Maybe even
70, 75 crores, would that number be?
73 crores.
Okay, understood. Thank you so much. I'll come back in the queue.
Yeah.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, hello. Thank you very much, sir, for the opportunity. So just wanted to understand the pricing trend of BOPP and the sustainability that you see on BOPP pricing. Yeah.
We are not BOPP, we are BOPET.
Okay.
We are not polypropylene, we are polyester. Are you asking for polyester or polypropylene?
Polyester.
Okay. So like I said that the demand growth is at about 12-13% per annum, and we expect this to be sustained going forward for the next years.
And you mentioned about like 28 rupees kind of per kg kind of a EBITDA, right?
Yes.
So
28 rupees may not be a number which could be sustained on a regular basis for the next many years. I don't think that's going to happen.
So what sort of sustained level that you look for maybe in the medium term in terms of in per kg?
Well, this year is going to be very strong because no new capacities are expected till middle of next year. So since no new capacity, demand is still going to continue to grow, so we expect margins to remain strong. Now, whether that margin will be 80 rupees in terms of value add or 70 or 65, I don't know. But it's going to be a fairly strong year.
Understood. Fair enough. Okay, so that's it from my side. Thank you.
Thank you. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah. Hello, sir. So my question is related to the number you gave, 25, 27 rupees or 28 rupees kind of a number.
Your voice is not clear. Can you please speak into the phone?
Hello, is it audible now?
Yeah, better.
Okay. So you gave the number of 28 rupees, but when I look at your EBIT per ton, it's even come to 40 to 43 rupees per ton. And if I add back the cost,
So that is EBIT, earning before interest and tax, as per the segmental results. In segmental results, as per the accounting standard, the unallocable expenses are not charged to the business. So it doesn't take into account the administrative expenses which are for the common functions. So the EBIT margin would be more than the EBITDA, because in EBITDA number that we told you, it included the common expenses also.
okay. My next part is that how is the, let's say, beginning of you gave the number of July, but how is like
Sorry, your voice is not clear at all. We can't hear you. We can't understand.
Hello.
Yeah.
Is it audible now?
Better.
Okay. My question is, in the July you gave the number of 77. Is there a major movement in the month of August so far in terms of BOPET prices or raw material?
No, there is no change in raw material prices. BOPET prices have softened a little bit, but nothing significant.
Okay.
Month-wise, there is always a variation of 5, 6, 10 rupees. It will happen.
Understood. Okay, thank you.
Thank you. The next question is from the line of Chirag Singhal from First Water Fund. Please go ahead.
Hello. Yeah, thank you for the opportunity, sir. Sir, I'm just trying to match the numbers you gave for the BOPET. So, last Concall you mentioned that the spreads, the gross value add was 52 rupees kind of, and you also mentioned that the Q1 will be much more better than Q4, which we are seeing on the EBIT front, like the margins have jumped from 26% to 34%. So I'm just not able to match the numbers when I'm doing it per kg or per ton. That this 55 rupees seems to be very lower. So you mentioned that the March on like in the March end the margins were like 72 rupees. So was there a drastic improvement downside in the quarter one on the spreads, and then again it sort of, is that the scenario?
First of all, in the last earnings call I mentioned that the Q1 numbers will be very good, you will be surprised, and that was taking into account the lockdown. Despite the lockdown, we have given these numbers. Q4, The PAT of 36 crores also includes a MAT recalculation of 9 crores. So if you remove that, the real profit was about 27 crores. Against that, we have given 29 crores in this, and if you compare it to the corresponding quarter, it was 24 crores. As far as the value, it touched a peak of about 74, 75, 73 rupees in the month of March, but it was not sustained during the March quarter at that level.
And when we give you the value addition, we give for only 12 micron commodity films. Then you have metallized films, you have value-added films.
We have 30 kinds of films that we sell, but the bulk of the volume is in 12 micron Corona, and that is a benchmark product, and we give you the benchmark margins on that.
Right. Okay.
So basically, margins improved in the month of June.
Okay.
In the June quarter.
Right. So as we are seeing that two lines which we know the competitors are going to come up with in the current year 2020. So are you seeing that there will be due to those?
No new line is coming up in 2020.
No. Two new lines of BOPET, sir.
Yeah, the two. India, there is no new startup till middle of next year.
Yeah, not India. Globally, I'm saying, but the prices are driven by the global prices, right?
Also, there is an impact, yes, not fully.
Right. So on the same front, I was asking that given the new capacities coming up and the next 12 months, are you do you foresee any improvement in the margins from the current levels because of the incremental capacities?
Listen, with the incremental capacities, one would expect a lowering of margins, not increase of margins. But in any case, demand is also growing.
From the improvement, I meant the same thing from the improvement. Like, are you seeing that will there be any reduction in the margins because of the incremental capacities?
Like I said, there may be, we expect FY21 to remain strong. It will be stronger than FY20.
Right. Okay. All right, sir, I'll get back in the queue. Thank you.
Yeah.
Thank you. The next question is from the line of Gaurav Lohia from Bowhead Investments. Please go ahead.
Hi, sir. Just wanted to clarify on one calculation. So the number you gave to Sonal, where you said that operations are normal, and we are running fully, and delta in gross margin, contribution per ton is about 22 rupees, right, versus Q1 number. So EBITDA, the delta in EBITDA is coming out to be 30 crores. So let's say if we have done an EBITDA of 55 crores, would that mean that we will be close to somewhere around 80-85 crores in Q2, assuming that things or contribution remains here only for the full quarter?
Yeah, more or less, if you do a simple math calculation, those numbers are more or less right. Whether it's 80 or 75, I don't know. But if these margins were to remain, then yes, the ballpark number that you have given would be correct.
Okay, and second on this, director's commission. So what would have been this number in Q1?
Sorry, what?
Director's commission that we say, right? What this number would have been in Q1? Do we account for like the same? Do we spread it out over 4 quarters, or is it like lower in Q1 and probably higher in Q4 when we know the full year profit?
Let me make a very clear-cut statement that our director's commission will be at 10% subject to a cap. The director's commission will not be irrespective of profit. So let's say if the profits were to go to 200-300 crores, the directors will not take the full commission. We will cap it at within market expectations and performance. Here also in FY21 we will cap it.
Understood. I was just asking, what that number would have been in Q1.
About 3 crores. 3 crores.
Okay. All right, sir. Thanks.
Thank you. The next question is from the line of Aditya Singhania from Enam Holdings. Please go ahead.
Thank you. So I just wanted to clarify how pricing moves in India versus globally. I understand this is a product where we don't import, I think, or maybe marginally, but there is some level of export. So is pricing some sort of export parity or global pricing, or how does it happen?
Yeah, there is a link between with export pricing and import parity. So, but right now we are running higher than both because of the strong demand.
Okay.
We are always able to attract a little bit of premium over import parity also.
So just to clarify, the 77 rupees you said in July, you're saying the global prices or global spreads may be slightly lower than this, and
yes.
This has always been the case, that India pricing is implying a slightly higher spread than global.
Absolutely correct. Your understanding is absolutely right.
Okay. And what would be the reason for this extra normal sort of extraordinary growth in India?
I think our population is the single biggest answer.
No, sir, but population was true 6 months ago as well. Why has the growth accelerated?
The growth is accelerated. See, please understand another thing, that we are talking about, whenever we talk about growth, we talk about growth in terms of percentages, when we say 12-13%.
Sure.
As the volume grows, the 12% on a, let's say, on a 500,000 ton will be 60,000 ton. On a 600,000 ton will be 72,000 tons. So there's a compounding effect.
Right. But has supply not kept pace with such addition?
Well, two new lines started up last year, which were fully absorbed without any major disruption. The next line in India is expected only towards the middle of next year. So capacity will need to be added to meet the demand. So we will need continuous capacity addition.
Okay. And what prevents imports from happening if spreads in India are higher?
You see, it's not easy to import. It's not like a bag of cement or sugar that, one bag can be consumed by any customer or any person. It's very fungible. In polyester film, you have to be very specific in terms of the product you want. There's so many variables. You have micron, you have length, you have width, you have coating, you have treatment. So it's a more of a custom-made product. It's not easy to import and consume. And there's a very big lead time. People are not able to also forecast exactly what kind of product they will need. So it's very difficult to import this product.
And final question, if I may be permitted to ask, we were hearing that there is some increased export demand as well from primarily European countries. Would you also see that in your business? And why is that happening?
The underlying reason for increase in demand of higher consumption of packed food.
Even in places like Europe?
That is happening worldwide.
This is the COVID impact.
Okay. Right. Thank you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Sir, firstly, if you could give the breakup between the specialty film percentage for the Q1, the polyester films. In the film segment, how much was specialty?
About 14-15%.
14-15% of the total sales.
Yeah. Volume.
12,600 to 14-15%.
We just commissioned our coater in the month of May. It's still not fully commissioned because we're not able to get the engineers in to do the full commissioning, so it's been slowed down because of COVID. But this will help us to increase our value-added product portfolio substantially in the coming months.
Right, sir. So this will be the enabler. 30%.
Yes. And we'll do that very soon.
So this will be the enabler for it. It is on full commissioning of this offline coater, that we will be able to scale up from the current 14-15% levels to 30 by end of this year.
This coater will help us to reach about 25-26%.
By when, sir?
Over the next few months.
Over the next few months. And what is the differential, sir, between these specialized films and the normal ones? The price, the realization difference?
Yeah. So the additional contribution from these products will be in the range of 50 to 70 rupees a kilo.
50 to 70 rupees. And in the cost side also, sir, it will add or large
contribution. So that takes care of cost.
That after the cost, it is 50 to 70.
Contribution. I'm talking contribution.
That is the sales. I'm talking about the profitability part, sir. If we compare both. Yeah,
profitability only.
It is sales minus.
Yeah, that is what. Okay.
I'm talking profitability only. The additional contribution over normal film will be anything between 50 to 70 rupees a kilo.
50 to 70 rupees a kilo.
आप ये मान लीजिए कि additional profit will be 50 to 70 rupees a kilo. On the coated film. On the volume of coated film.
Ji, sir. Sir, secondly, sir, how have the raw material basket behaved, sir?
Very flat. For the last 6 months, it's remained 4 months, it's remained absolutely flat. After long.
Okay.
April onwards.
Okay. So both the PTA as well as the MEG prices have been, the flattening of the curve is there for them. There is no exaggeration.
There is zero movement in raw material in the last 4 months.
Okay. And availability is not an issue, sir, in any case.
No. It has never been.
It has never been the case. So now, if we come to the engineering plastic part, sir, it has been the pain point for even in last quarter also, and even if we take the December quarter also, we were contemplating, sir, to put the same on block, and now with COVID in full blown, any M&A would be a tough task. So what has been the capital employed for this segment, sir?
The capital employed in this business in terms of investment to receivables, inventory, etc., all put together is about 65 to 70 crores, including fixed assets.
65 to 70 crores. And sir, can you give the cash earning for this quarter? What has been the cash earning money? However,
this quarter has been a bad quarter for Indian plastics because the application industries were all under lockdown, and therefore the volume of sales was very less. We normally do about 2,400 to 2,500 tons per quarter, but this quarter we could do only 1,200 tons. So this quarter is not indicative of the normal scenario.
Full company, sir, I'm asking, sir, what has been the cash accrual for this quarter? So we made a profit PBT of 39 crores.
Accrual for the quarter. It's also a very good indication is also that our total debt has reduced from 142 crores to 99 crores.
Right, sir. Okay.
So from between 31st of March 2020 and 30th of June, we have reduced our total total liabilities by 43 crores.
Correct.
So, sir, profit before tax plus depreciation minus the tax outgo, the amount is about, cash accrual is about 45 crores.
And that is exactly corresponding to the reduction in debt.
Yes.
Okay. I'm just talking about the receivable cycle also. Is there any mismatch due to this COVID, or the cash cycle is the same as it was pre-COVID?
It is the same.
So debtors are getting collected.
Hello?
The debtors are getting collected on time. There is no major. There is no issue. There is no issue.
No issues with the same. And so now coming to the other part about the customized, the polymer part, the specialized film, the MB1 and all. So you mentioned that due to the lockdown in the international market, especially in the US, the growth will be backed by how many quarters, sir? I missed the point.
Very difficult to say, but we expect that majorly only one product has got affected, which is the MB03.
Right.
Which was a key product in our specialty polymer portfolio. Because this was going for the commercial carpet application. And as you know, commercial spaces are completely, everybody is working from home in the US. So the commercial segment has taken a very big hit right now. So if activity starts again, this volume will revive.
Right. Two more questions. What will be the capex for this year, sir? Last point, ma'am, I'll come. What will be the capex figure for this year? And want to come to the queue, ma'am.
So the capex, we have outlay of 45 crores.
This is the expansion plus the maintenance capex.
No. This is other than expansion.
Expansion में कितना होगा sir for this year? Envisage the figure.
Expansion में हमारा इस साल Ester से, because it's going to the investment from Ester will go as equity into the subsidiary, And this year we expect to be about 100 crores expenditure in less than 100 crores expenditure.
As equity investment into wholly owned subsidiary, less than 100 crores.
Right, sir. And any partner also we are contemplating? Yes, I'll come in the queue, ma'am. Please send me to the queue.
No partner.
Okay.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
So just a clarification, you mentioned that, in July your gross value add for the normal.
Sorry to interrupt, Mr. Kohli. Sir, we're not able to hear you clearly.
Am I audible now?
Yes, much better. Thank you.
So, sir, you mentioned that the gross value add was about 77 per ton and your normal commoditized, 12 micron, unit. And obviously this, the higher quality ones, specialty ones have a higher margin. Then you also mentioned that, this number may be 50, 55 going forward, why are you expecting this number to fall, and would you expect this to fall in a quarter or two?
I didn't say it's going to drop to 50, 55. It was earlier.
So would you expect this number to be range bound like in July? I mean, plus minus 5, 10 either side?
July is already gone. I mean, it is.
Going forward in the next few months or quarters?
It will be range bound between 65 and 80 rupees.
Oh, I see. And how would the capacity additions globally impact you? If we can't import, and why should it impact? And also, are there any import duties which prevents imports from happening?
Yeah, there is an import duty of about 11%. So there is an import protection.
Okay, and how would global capacities impact you? Is there a way these could come into Indian market? Has it ever happened in a significant way?
Imports really don't matter in India because import hota hi nahi hai.
So let's say, sir, if there's no capacity coming for next, hypothetical question, for next 12 months, before it becomes operational, and, assuming there's some capacity coming up globally, would the pricing in the domestic market in any way get impacted because of the global capacity where demand in India is robust and there's a demand supply mismatch in India?
Like I said, please understand, fundamentally, there is a very strong demand growth in polyester films globally and in domestic market. So it's going to continue to go up. You might have short-term glitches where you might see and this happens this could happen month to month as well. It's not necessary that if today our margin is at 80 rupees, it is going to remain at 80 rupees going forward for the next few months. There are various factors which come into play which cause the margin to reduce by 5 or 10 rupees for a short period of time, again go back to higher margin. So largely, I have mentioned that the direction is going to be strong for this for FY21 because no new capacities are coming up and demand is growing. It's very difficult to estimate exactly what the margin is going to be between now and March 2021.
And this new specialty capacity which you are talking about is going to come over. What kind of incremental delta would it cost per ton at the overall level? Because it would be a small portion of.
I didn't understand.
You talked about that,
offline quota.
Yeah.
So I have already mentioned that the offline quota will, the volumes coming from there will give us additional contribution or let's say profit of anything between 50-70 rupees a kilo.
Yes, but the weightage would be relatively small. So I'm just trying to understand, what is that absolute number?
Volume at full capacity close to 3,500 to 4,000 tons a year.
So the right match would be 60, 70 multiplied by, 3 divided by, which 3,000 is per year?
Say additional 20 to 25 crores profit from the quota.
Incremental. This is a yearly number you're talking about, right? 25 crores incremental number compared to whatever it is. Oh,
correct.
Understood. Thank you.
Thank you. The The next question is from the line of Ankur Agarwal from RC Wealth Solutions. Please go ahead.
सर ये जो आपका इंजीनियरिंग पॉलीमर डिवीजन है ये लॉस में है क्या
Sorry to interrupt, Mr. Agarwal. Sir, your voice is sounding very soft. Can you speak a bit louder?
Hello.
Yes, sir.
Yeah, go ahead, please.
ये इंजीनियरिंग पॉलीमर डिवीजन के बारे में जानकारी लेनी थी इसको मतलब क्या लगता है फ्यूचर इसका
In plastics or specialty polymer?
Are you talking about engineering plastics or specialty polymer?
इंजीनियरिंग प्लास्टिक
Engineering plastics has started to do quite well in the first quarter of this calendar year, but then the COVID came and we had a sharp reduction because the downstream application industries were affected very badly, which is largely auto and electrical. But we have seen a very surprising turnaround in the month of July. We have yet to see, we have to wait and see whether this will be sustained. Of course, it will be way better than Q1 going forward. Q2 will be very, very much better than Q1. And we hope that the revival will be strong in this business in this current financial year.
Okay. And जो BOPP फिल्म है और जो BOP पैक फिल्म है तो इसमें क्या आपस में कन्वर्जन हो सकता है कोई कस्टमर वो यूज कर रहा है अगर वो कॉस्टली है वो चीपर है तो उसमें कन्वर्ट हो सकता है या दोनों के वो अलग अलग हैं पर्ची
The market is very well segmented. There is a very, very small overlap.
Okay. टोटल एक्सपोर्ट सेल हमारा कितना है परसेंटेज टोटल सेल का
इस क्वार्टर में 30% एक्सपोर्ट है
In June quarter we had exports of about 30%.
30%. कुछ फिल्म रीजन से भी एक्सपोर्ट होता है हमारा
हाँ
बीओपैक फिल्म का भी एक्सपोर्ट होता है कुछ हमारा
हम बीओपीपी बनाते ही नहीं जी हम तो सिर्फ पॉलिएस्टर बनाते हैं
ना पॉलिएस्टर फिल्म का भी एक्सपोर्ट होता है
हम पॉलिएस्टर फिल्म ही बनाते हैं और
8% एक्सपोर्ट है क्वार्टर में गोइंग फॉरवर्ड इट कुड बी लेस
Okay. Thank you.
Thank you. We'll move on to the next question. That is from the line of Keshav Garg from Counter Cyclical Investments. Please go ahead.
Sir, congratulations for great results, sir. But you will recall that, sir, 2011 also something similar happened, sir, like a typical commodity. So the spreads and realizations went up. We did 33% operating margin. And sir, but from the next year, sir, there was such a glut in the market that operating margins from 33% they reduced to 5%, and they remained at low single digits for many years. So like in a typical commodity, sir, still this time also same thing will happen. Right now the spreads are very remunerative. So I mean additional capacity will come, like you yourself are expanding capacity. So will everyone else, and sir, so subsequently definitely margins have to fall.
Okay. So you remember only one part of 2010, you've forgotten the other part apparently. And let me remind you. In you are absolutely right that 2010 the margins were crazy and then there was a crash. But there was a reason behind the crash. 30% of the domestic sale went away overnight because of the ban on gutka. If that hadn't happened, that crash also wouldn't have happened. And also you must not forget that in 2010, the total domestic demand was in the region of about 14,000-15,000 tons per month. So when 30-40% of your demand goes away, you are burdened with a massive oversupply, which was completely unexpected. Nothing of this sort is going to happen. अब कोई गुटखा तो बैन करने के लिए बचा नहीं है ना हमारे पास.
Right.
So we don't expect any such crash to happen that happened. That was specifically because of the ban on gutka. And gutka was consuming 30-40% of the domestic demand. And the domestic demand totally was about 14,000-15,000. Sorry, it was about 17,000-18,000 tons per month. Today the demand is at 42,000 tons per month, 44,000 tons per month, and growing at 12-13%.
Okay, sir. Sir, much appreciated. Sir, but also, sir, I was comparing our company with, sir, our competitor Garware Polyester, and both companies have similar, basically capacities. Sir, but their value-added proportion is almost 70% of their sales, and their exports are also 2/3 of their sales is exports. So and we are still at the value added portion is like 15% in our turnover. So then why such a big discrepancy, sir, and what will it take for us to increase that value-added proportion that our competitors have been able to do?
Not competitors, only one. Garware has not grown in terms of volume at all, and I don't know what their plans are in the future are. But they're also into thick film, where they have a very high proportion of value-added products. We don't have any thick films. And plus they have had historically a product called Sun Control and some other products which is why they have a very high proportion of value-added products. Nevertheless, we are also on the same path of increasing our proportion of value-added products. 30% is our short-term target. It is not going to stop there.
Sure, sir. And sir, also, sir, if you could just tell us broadly that, sir, in FY17 our operating margins were 6% and they have increased to now over 25% in recent quarters. So how much has the realization changed of the polyester film that we are selling? Broadly, sir, in FY17, what was the price and today what's the price?
I don't have that data available. We weren't expecting to.
You can make a call to us offline. We will retrieve this data from our books and share with you.
Okay, sir. Thank you very much, sir. Best of luck.
I don't have the data available for 2017 readily.
Okay, sir. Thank you.
Thank you. The next question is from the line of Chirag Singhal from First Water Fund. Please go ahead.
Yeah. Thank you for taking my follow-up question, sir. Sir, on the EBIT front, which I just wanted to, extend my earlier question. So you have generated operating EBIT of 55 crores, segmental EBIT in the film division against 50 crores last quarter on a lower volume base. So if I convert that into per kg basis, then we are seeing a 10 rupees per kg increase in EBIT sequential basis. So, so 3-4 rupees is what we are understanding that this is because of the increase in spreads. So the other 6 rupees is, if you can explain, if you can throw some light on that.
So we talked only of domestic market commodity films. Then you have metallized films, export, value-added films, and there was certain savings on the expense part also. So EBIT takes into account the raw material cost, conversion cost, selling cost. So there were savings in the other expenses also. So as a result, the EBIT margin has improved.
Okay. And pardon me for my ignorance.
Everything is not on account of value addition. We could save on the administrative expenses. We could save on material handling expenses. These were also lower.
Yeah, that's very well taken, sir. But it's like 6 rupees per kg is not a small figure, right? So not all of it would come from savings in cost. And lower operating leverage would have also increased the cost. A lower capacity utilization would have also increased the cost, yeah.
If you compare our results with the previous quarter, you will see significant savings in the administrative and other expenses and that is the category we are saving 6 to 7 crore in this quarter over the last quarter.
Okay. All right, sir. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
So, sir, you mentioned about some capacities coming on mid-year in India. What kind of size of capacities would that be? And, considering the market growth, would that be able to absorb these capacities, if not in 1 month, over a couple of quarters, if you could throw some light on the total industry size and the capacity which is coming up, in next 12 months, mid-year, and how would the picture look like, let's say, 12 months from now?
You see, I have already mentioned this before. The demand growth in domestic market is about 12-13%. If I take only 12%, today our domestic consumption is more than 500,000 tons per year. So if I take 12% on that, it's 60,000 tons. That's almost 1.5 to 2 lines per year additional requirement. So we don't expect, last year 2 lines चालू हुई, they were absorbed without any major disruption. Next year 2 lines will start up. In fact, this year 1 line was supposed to have started up this year. The industry and the market needs this additional volume. We want this additional volume to come. We are not happy in starving the market.
So, sir, the 6 lakh numbers which you talk about, is this like 2020 number, or which is the 6 lakh number, or is it quarterly number which is analyzed? How do you arrive at the 6 lakh number?
Okay, so the domestic demand is 5,000 tons per month. That comes to about 540,000 tons per year. Each new additional line is between 35 and 40,000 tons. Now, on a base of 540,000 tons, if you take 12% growth, you're talking about 60 to 70,000 tons of additional demand, which these two new lines next year will provide.
And sir, when would your capacity come up?
That will come up in the second half of 2022.
And sir, typically, can you start this capacity at full utilization on day one, or it takes a couple of quarters or a couple of months to reach the full utilization?
Very quickly. So we are now experienced in this business, and we can ramp up very quickly within a period of maybe 1 to 3 months.
Understood. Okay. Thank you so much.
Thank you. The next question is on the line of Saket Kapoor from Kapoor Company. Please go ahead.
Okay. Thank you for the opportunity again, sir. So the point was that we came with a codified dividend distribution policy, and thank you to the directors and the team for doing so for the investor community. So looking at the cash generation which we are envisaging, and God willing, as and when we succeed, and looking at what the taxation part has been on the dividend on the part of recipient being taxed now, sir, could the board look at buyback also as a more better mode of rewarding shareholders, since it is a tax efficient way also of returning cash back to the shareholders? I know this is COVID period, and it would be very difficult for us now to conserve cash, but since we are coming up with capex also, and the cash generation has not been affected, so what is the thought process, and when is our AGM scheduled, sir?
AGM is on 28th of August.
Right, sir.
And all options are there. The board will consider everything at the appropriate time and take a decision which will be most beneficial for all stakeholders, including the shareholders of the company.
Yes, sir. Only on the taxation front, I was just thinking it would be tax efficient for everybody.
Please understand, I'm making a very clear-cut statement that the interest and benefit of the shareholders is always very high in our priority.
Correct, sir. And sir, thank you for the team, sir, putting up a good show, and we hope for better numbers going forward, as we will be as told by you that we will be running at full utilization levels for this coming quarter, and definitely we are expecting a better show from the company going for. Any effect on monsoon, sir, or any?
No.
No, it will be a normal quarter for us going forward also.
Right.
In terms of production and dispatch numbers, sir.
Right.
Thank you, sir, and all the best, sir.
Thank you. The next question is on the line of Arnav Kapoor, an investor. Please go ahead.
Thank you, sir, for the opportunity. So you had mentioned a guidance of around 70 crore this year and about 300 crore in 3 years for your SQ business. What should be the EBIT on that? Would it be same as the level that you're operating?
EBIT, as mentioned, is going to be between 30 to 40% in this business, and going forward, also we will maintain these numbers.
Okay, so thank you. And how much of this is exported for this?
FY21, like I said, because of the expected drop in volume in MB03, this year could be a bit of a hiccup. But otherwise, going forward, we are very confident of maintaining these numbers.
Okay, sir. Thank you. And how much of this business is exported? Like how much of the SP capacity is exported versus India?
Right now,
all exported. So all US.
Mostly US, Europe, some going to China now. China starting up.
Okay, sir. Thank you. And on the last earnings call, you had mentioned that you're looking for a diversification in the SP business, and about 110 crore was approved. Are you looking to do that? Are you looking to progress on that, or it's on hold given COVID for now?
Because of COVID reasons, we have now we are having a relook. We will take a call on this in the next few months. We put it on hold.
Okay, sir. Thank you. And the 300 crore guidance, we should take that for the 3 years, which you had mentioned.
Sorry?
You had mentioned 300 crore by FY23 or 3 years for the specialty product business.
Yeah.
So we should continue with that.
So in the next 3 to 4 years, 300 to 400 crores is entirely possible from this business.
Okay, sir. And the sales from MB06 or MB16, which you were mentioning, which is kicking in this quarter, can you give a number or any range for that?
Well, right now we are going to start off very slow. No business picks up and goes to full levels. But we are expecting the first order in the next week or two. And the potential that the market has given us, it could be anything between 2,000 to 3,000 tons per year.
Okay, sir. Thank you so much. All the best, sir. Thank you.
Thank you. The next question is from the line of Shivlal Khandelwal, an investor. Please go ahead.
Good afternoon, sir. Can you hear me?
Yes.
Sir, just I wanted to know why the expansion is done through subsidiary, why not in the same company only? And what will be the debt equity portion of that?
So the expansion we are doing in a subsidiary to take advantage of the lower tax regime that the Honorable Finance Minister announced. So new companies can take advantage of tax rate at 15%. That is the reason why we are doing it through the subsidiary route.
And what will be the debt equity ratio in that, sir?
30% would be through equity, 70% would be through debt.
But that debt will be able to service quite comfortably then?
Very easily, because majority of that debt is going to be in form of ECB, external commercial borrowing, which is going to be at a very, very low cost, extremely low cost.
And one another question, sir. Next 2 to 3 years, how much export turnover, total turnover in export contribution we are expecting?
From which product?
The total all together.
Well, FP is going to be all export. Film will maintain anything between 20 to 30% in export volumes.
Okay, thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Rahul Nadkarni, an investor. Please go ahead.
Yeah, thank you so much. First of all, I would like to start by congratulating the management for an amazing set of results for this quarter in spite of the challenging times for COVID. Yeah, so in terms of the few questions from my side. First, in terms of the expansion that we are having by way of a separate subsidiary. One, have we closed on the debt tie-up for that particular project, or we are yet to tie up the funds in terms of lending?
It's work in progress. It's happening, and it will be closed in the next few months. It's not a problem.
Okay, but it will be an offshore debt.
Part of it, not all of it.
Okay.
So out of the approximate 350 crore debt, 200 to 220 will be in foreign currency, and 130 to 150 will be rupee debt.
Okay. Understood. And what would be okay? So you're still on the tie-up stage for that. Okay. That is one question. Next question is in terms of the specialty polymer business. There was a statement in the investor presentation that innovative PBT, the capacity that you had was significantly higher as compared to if I take a quarterly average of the annual capacity, which is contracted with this global chemical player. So if let's say the annual capacity goes over and above that for which the order is there, does the price remain same, or is there a...
price remains same. Price is contracted. In fact, the price is contracted on a fixed margin basis. So if the price moves up and down based on raw material, the margin has been negotiated and fixed.
Okay, understood. Then the next question is in terms of your engineering plastics division. So there, because I understand because of lockdown, there was serious impact on the application industry. just if you have a broad breakup of cost in terms of what is the variable and fixed cost for the engineering plastics business?
So direct variable cost would be, if you talk,
it changes from product to product, but
average.
In terms of broad, I'm more concerned with the fixed cost. Variable is still it will vary based on your revenue, but what will the fixed cost?
No, I'll do it tonight. Just, if you have another question to ask, I'll take 5 minutes to get back to you.
Sure. So another one more question in terms of now the cash levels. So the company has been generating healthy cash accruals, which is evident from the debt servicing that you guys are doing, debt payments, prepayments that you are doing. So I wanted to understand, I heard in the Concall that somewhere around 40-45 crores is the cash generation on a quarterly basis, right? Yeah. So with the now if I look at the debt which is there, it is around 98 crores, out of which working capital is only 26 crores. So on the next this quarter, with 45 crores additional coming in, do you expect to do some prepayment on the term loan piece as well, or you are looking at using those proceeds for equity infusion?
So we will have whatever is the cash judiciously used for prepayment of debt and for equity infusion into the subsidiary.
Okay. And are you planning in terms of the debt that you would be taking at the subsidiary level? Are you expecting to give a guarantee from this from the company, a corporate guarantee?
Given.
Hello.
Yeah, corporate guarantee will be given for this debt. Obviously,
will be given. Okay.
So regarding the variable cost and fixed cost, and the variable cost over and above raw material is in the range of 9 rupees 50 paisa to 10 rupees 50 paisa per kg, depending on domestic which is. And fixed cost, including all elements of cost, direct and indirect, is about 10.5 to 11 rupees.
So how much would that translate to in terms of your actual quantum in terms of fixed cost? Absolute.
I couldn't get.
Okay, but volume.
The volume. Okay, the fixed cost.
Yeah, absolute number in terms of what is the fixed cost that is incurred. Cost
for a year on a normal volume basis, it would be 5.5 to 5.6 crores.
Okay, understood. Okay,
thank you.
Okay, I think that's it for me. Thank you.
Thank you. The next question is from the line of NN Modi, an investor. Please go ahead.
Good afternoon, sir. Thank you for taking my question. Sir, that coating machine is now in full swing, sir? That has been fully commissioned?
No, it has not been fully commissioned. The machine we started up in May, but there are still travel restrictions, so we are unable to get the engineers to come in to finally, fully commission it. So it's only partially commissioned.
Oh. So it is to come from abroad, sir?
No, it's got to come from Bombay.
Oh, Bombay only. Okay.
Yeah.
Okay. Other thing, sir, I wanted to know, in this, sir, in segment, there are two types of revenue. One is polyester chips and film. So this polyester chips and film consists of polyester film and this thing, your polymer, specialty polymer, na?
Yeah, correct. Polymer. Correct. Yes.
So, sir, can I know the breakup of the last year turnover, sir? This 877.92 crore we have done the turnover. So what was the breakup, sir, for this polyester film and specialty polymer?
Out of this, 73 crores of specialty polymer.
Okay, so the major portion is polyester film only.
Absolutely.
So sir, I think 90% of our turnover consists of polyester film, or of this company as a whole.
75% comes from polyester film, another 6 to 7 from polyester chips, and 7 to 8% from specialty polymer, and close to 14 to 15% from Indian plastic. Last year rate.
Okay. So more or less, this year also it will be same. And whatever there will be shortfall because of USA in specialty polymer, that will be compensated, I presume, by new product you are launching.
See, again, whatever is the loss this year on the specialty polymer, basically MB03, is going to be a permanent loss. I mean, that is the time gone, volume gone is gone.
Yes, sir.
This volume will come back. once things stabilize in the US,
Yes.
all the new volumes which will come from the new products will be over on top of that.
Okay, sir. But at the same time, sir, we are launching some new product now. So whatever the shortage will arise because of that will be compensated by the new product, as you were telling about carpet.
This year we will not be able to compensate that loss.
Okay, sir. Okay, sir. Okay, sir. Okay, sir. Thank you, sir. I understand.
Thank you. We'll move on to the next question. That is from the line of Gaurav Lohia from Bowerhead Investment. Please go ahead.
Yes, sir. Just wanted to clarify on specialty polymers. You mentioned that you expect somewhere around 300 crore revenues in next year's line and EBIT margin of 35%. So would that mean that even newer products would have the similar margin profile as your patented products such as MB03? And that would mean somewhere around 100 crores of EBIT. So, are these numbers like way off in our expectation, or would we have to do some capex, and that's why, one should not be looking at this EBIT margin, and there would be additional interest also?
See, the blended margin in the specialty polymer business will be in the 35% region.
That is the current scenario, right? I mean, going forward also it would...
Even going forward, the new products also will demand this margin number.
Okay. And would we need to do major capex to be able to get to that 300 crores, and therefore the EBIT margin while maybe higher by...
No.
So that would lead to straight addition of somewhere around 100 crore of EBIT in your current numbers, right?
Right. So no major capexes are required to reach at least 300 crores.
Okay. Understood, sir. Thanks.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you very much for joining us for the Q1 earnings call of Ester Industries, and we look forward to talking to you again after close of Q2. Thank you very much.